This is Wilson Stafford. He is a principal in the capital markets division at EDGE Realty Partners. Wilson, tell us a little bit about yourself and what you do at EDGE.
Yeah, so I've been in the business since '04. I've been with EDGE since 2013, so just about 12 years. I've started out in the business and actually on the office tenant rep side, and then moved over to the capital market side probably about 3 years after I got into the business, focused on office and industrial investment sales, and spent about 5 or 6 years, or 4 or 5 years at Cushman & Wakefield, and then I went over to EDGE, and I've been there ever since. We focus a lot on what we call private client as opposed to institutional sales. That's certainly what we did over at Cushman, but we also had quite a few private clients that these are, private equity groups, family offices, individuals. We felt like there was a opportunity to pick up significant market share in that sector because there wasn't at the time a number of companies doing it. Certainly options out there, but we took more of an institutional approach, our Cushman model, and applied it to in the same quality of service and applied it to the private client. We started the capital markets arm of EDGE Realty Partners back in 12. I came over in 13. Our team's very entrepreneurial, so we actually focus on a number of different things, primarily the primary food groups of office, retail, multifamily, and we do some industrial as well. I've kind of seen it all, just from all the asset classes. So our team works a little differently. We work as a team. We all have certain expertise, but we find on the private client space and the private space that we have quite a bit of crossover and of investors that maybe they sold a big multifamily portfolio and they don't want to pay similar cap rates to what they were trading at. And so they're looking at other asset classes. So we certainly have, they're not as in a box as you would say, an institutional fund or something like that. So we sell probably, I want to say, anywhere from 60 to 80 properties a year. And so we're in the market every day, kind of know where the investor return requirements are. We like to be nimble and accommodate establish relationships and accommodate any client's needs.
So how does the private client sphere differ from just
the institutional side?
Yeah,
I would say, I actually have a lot of conversations about this. I would say it can be more challenging. A lot of times. And a lot of times on the institutional side, those are very experienced owners. They partner with experienced operators and sponsors. They buy, I'd say core plus properties. And, so specifically as it relates to the real estate, they typically maintain their real estate, all their leases, and they know how to structure leases. They know how to, maximize value of real estate and be long-term stewards. On the private client side, there's certainly quite a few of those, right. Private equity groups and even individuals. But you do tend to run into individuals that there can be some inexperience. There are times that you're dealing with, challenges to unwind. Sure. and help an individual or a small company out of something that could be an issue. The other side of it is on the private client side, one aspect that I really enjoy is you're actually working with either the sponsor and the individual that owns it. Right. Whereas on the institutional side, typically you're working with an asset manager or their boss, but we're dealing with people that actually, where the proceeds actually mean something. I mean, right. I'm not saying it doesn't on the institutional side, but right. There's a direct impact on the proceeds.
It could be, for example, for a family, and they're going to use the proceeds to
exactly.
a legacy or pay for education.
Yeah, or whatever. So it's so there's a lot more nuance. It can be more emotional. It can be more, our deals aren't as buttoned up a lot of the times, as I would say. So there's certainly challenges. There's challenges on both aspects, right. But you never. Sometimes you don't when we're evaluating an asset. You don't know what you're going to uncover,
right? Right.
Where it's a little bit more predictable on the institutional side, but I would say there are, a couple of times a year where we run into situations where there's certainly challenges because of the way that the ownership or the owner has operated the real estate.
Right. That, and I think that leads really nicely into my one of my main questions, which are, how do the leases in an asset that's going to go to market, how do they affect due diligence in terms of badly drafted leases or inconsistent leases, or even just a disorganized pile of documents that you have to sift through because a sophisticated buyer wants to
so
go through
I would say, let's back up just to say, I would say that actually, as far as due diligence, I would say the structure and the way the leases are done actually it's going to impact value. So a lot of certainly majority of owners on the private side, they understand lease rate is going to determine value. Well, that's not the only aspect.
Exactly.
And there's a lot of, and this, we advise quite a few clients on this. Hey, if you just do this, we can actually extrapolate more value. A couple of things that really go into it is really the leases are the most important. I mean, the underlying value of the real estate, but also the leases are the most important to drive pricing in the way that they're structured. Rate is very important, but how you structure those rates.
Yes.
There's certainly a bunch of times that we come in and see that, somebody feels like they've got it. Oh, we just in term. We feel like they just got just signed a renewal or signed a new lease with the tenant, but it's like 5 or 7 years of flat rent. That actually hurts value.
And it's interesting.
That's just an example.
And I think we've been in transactions together where you have actually made suggestions when, when we're in this process of how to make a leasing profile for a specific tenant better when the renewal's up. And I think that's such, and how much, do operating expense reimbursements
yes,
play?
Exactly.
Probably big.
Yeah.
Right?
So there's another nuance to it. I mean, you get into these situations where we've certainly seen situations where you have tenants on different types of reimbursement schedules. That's not uncommon, and it's not necessarily a detriment, but where we find, as it relates to structuring leases, let's leave some of the business terms out of it. If you're looking at nuances of, what types of caps on reimbursements, if there's a cap on, even if there's a cap on non-controllable expenses, we find that rare.
Right.
Where especially in a state like Texas, where you can get reassessed, your value can, and if you can't pass those expenses, some of those expenses, uncontrollables, through to the tenant, that can be a major detriment to your value, because that eats right into your NOI. Our fully gross leases, that's also an issue. We sometimes will see nuances where an owner signed a long-term lease and feels like they structured it great, but then you have a termination right that's in like year 3 if it's a 7-year deal, and they just didn't understand that anybody that's underwriting that, even if there's a sizable penalty, that's going to have an impact on the value, and a lender as well as a buyer is going to underwrite it as a 3-year lease.
How have you? That's such an important point because the leases are going to go through, especially the big ones, going to go through an underwriting committee usually. When you see an underwriting committee work, what are the provisions that they pay attention to the most? Because I oftentimes say your underwriting committee is not going to care about your force majeure provisions or your eminent domain provisions.
Yeah, they're not.
What are the key areas that they look for, you think?
If you just think about it, just strip everything out and you think about it as simply as you can, it's usually the best way to do it. I always tell our young brokers that and our analysts, like, what would get you comfortable buying something?
Right.
And that's the first question. Paying the price that you're paying. How are you going to get comfortable? Obviously, it's credibility of tenant, but then going beyond that, it's what are the provisions in the lease term, the lease rate, how it escalates, but reimbursements. Is there anything in there that can have I wouldn't say negative impact, but really that can have an impact on our value, on our annual cash flow. Okay. Specifically, that goes back into reimbursements. Or, are there any termination rights? is this lease what I'm buying, or let's just say if they're looking at a multi-tenant office building, I'm underwriting it to a certain WALT, or I'm underwriting it, these tenants to certain lease terms. Are they actually there for that long? Are there any kind of nuances in these leases that can have an impact on our annual cash flow that we did not know of before, prior when they get into due diligence? Or if they do find something, let's just say there is a termination right or something that they did know about, it's obviously when we're underwriting it to value it, that's going to have an impact on your value.
Of course.
And so even like I go back to it, even if you did have, let's just say, a 6-month or a year-long year's worth of rent penalty, it still has an impact on value.
Of course, right? Because it's just simply a year's penalty, and not the remaining 6 years of the lease.
I mean, as a broker, we can make the argument like, let's just say they have to give 6 months notice, and then there's 6 months of rent penalty if they terminate.
Right.
We would try to say that you have some runway to lease it back up.
But the bank, I know what that's. But the bank doesn't really care.
No,
that's
care.
not really.
So, but as far as the aspects, it's really where we find the most issues is on reimbursements. The issue that we've seen in Texas as a whole is that rental rates or expenses have risen faster than rates.
Yes.
And so when you have a situation where historically the buildings have been on base year expense stops,
right?
Base year expense stops. A lot of times we see leasing agents, they don't necessarily have the insight. I'm not saying that they're not, they don't understand.
But they're not involved in the sale, the disposition of the assets, so they're not
they're thinking about, hey, we're getting you $2 more in rent. If you do have buildings that are on expense stops or modified gross leases, you just need to pay attention, especially what the tenant is paying in pass-throughs. When you convert it over to net, it's a straightforward. You don't have to make that, that's not an argument or something that you have to pay as much attention to because they're just responsible for reimbursing.
I've had clients, just simply law clients come back and say, David, I can't figure out why my building isn't making money anymore and they're these gross leases. And I keep telling them, it's because operating expenses have increased at a rate far beyond what anyone could have anticipated. CPI isn't just like, piddling along 2% a year, 3% a year.
The vast majority of that is in taxes. Like, so for example, we sold a building earlier this year. The largest tenant in the building was, it just gives you insight to how fast expenses have risen. I think they were on initially, they still had a same base year, but they were rolling to net. They were rolling to net, but at the time when we were selling it, from when they signed their lease, they were paying $6. The expenses were, I think, $12.22 or $12.23 in the building, and their pass-throughs from 2012 were $6. So they $6.43. Yeah. So that tells you that the expenses had doubled in basically 12 or 13 years. And so those types of things, if your rental rate is on the face is not is stagnant, you can be underwater when they reset if they're astute enough to reset those base years.
Right.
Having it kind of takes some of the optics out of it, like the landlord. When you convert somebody to a net lease, it's just here your expenses are what they are.
Right.
They don't necessarily tenants don't necessarily always understand. Hey, well, I'm paying this, rate, but why am I paying this extra money on these pass-throughs? Because I thought this lease was gross.
There was a huge mental block converting tenants from a base year or whatever the situation is to a triple net lease. It's like conceptually it really, and I understand why, obviously, because there's more uncertainty for them, less uncertainty for the landlord. But it all gets baked into the price somehow at the time.
Yeah. So I mean, the main things are, and then you get into the expense stops. Like, so now let's just say let's move to converting, to triple net, because most of them are converting.
Right.
And there's also value for people buying buildings that they can convert, or that they look to convert. But just the nuances and some of those things that can affect value. I mean, obviously, there's any astute. We don't find it very often, but most you never want to put caps on uncontrollable expenses,
Right.
Such as taxes and insurance. Sometimes there can be situations where there's below market caps on controllable expenses to where, I'm not going to say it has a detriment impact to the building because you're going to, a good operator will run it, but it can eat into if you can't grow those expenses, like, increase payroll and things like that for your management team. And so, just being aware that you're not putting like a 3% cap on your, on your controllables. Maybe it's a 5 or 10, 7%. A tenant will try to get away with as much as they possibly can, but you just want to make sure you have market on those nuances.
And during that period when you're preparing a property for sale, are you working mostly with their attorneys, the seller's attorneys, or brokers, or how does that kind of work?
So when we put we're working with the owner.
Right, the owner directly.
So we have. So if we get into a situation where, let's just use an example, if we get into a situation we uncover that there's some maybe a few leases that we see having an impact on value.
Right.
And that does happen once or twice a year.
Okay.
And we will go back to based on, because sellers always have an expectation.
Right. And this is before you go to market,
yes,
right?
Yes.
Okay.
So what our role will be, we look at it as we even have clients that will reach out to us and say, hey, I'm thinking about, doing this lease, what do you think about the structure before they even kind of get into that? Because once a lease is set in stone, it's set in stone.
That's right.
You can always amend it.
But it's a contract.
Yeah. But it's a lot more difficult to go back to the tenant.
Yep. With your tail between your legs.
Yes.
Yeah.
And so, we just had a situation like this where a building we valued was it had to do with the expense reimbursements were having a negative impact on this one tenant. It was having a negative impact on the value. The owner didn't necessarily understand that, whereas having a negative impact on the net income or net operating income, and it would be perceived on a sale like that it would eat into that net operating income even more. Even though this building had, I think it had 7 tenants, and the WALT was like 6.8 years, which is great and it's the majority of it's medical, 90% medical tenants. So if you're looking at it, it looks like the right type of on the surface. It looks like the right type and very nice, safe investment. Right. I'm not saying it's unsafe. I'm just saying, if he wanted to go and sell it. Astute buyers will look at that and say, you know what, I can't give you as much value as you want because of this risk here of my net income decreasing based on the way the tenant is. Specifically here, there was a cap on their controllable expenses.
And the result is that they're going to try and retrade
on their uncontrollable expenses. I'm sorry. Yes. Well, the result on that is the argument is, especially in this market, like, I think the building was on the assessed from the county at I believe it's like $11 million.
Okay.
We were talking about a $15 million value. So when the property gets reassessed, any buyer is going to underwrite is probably 100% or 90% of the acquisition price.
Got it.
So when that happens, and all of a sudden you have 20% or 22, I think it was 23% of the building, that you can't capture that increase in the taxes, the reimbursement.
Right.
Who's paying for that? The owner is.
Right. Exactly.
So fortunately, in this situation, the owner, that tenant was a partner in the building. So we told them to go back. We told the sponsor to go back and talk to the tenant how that specific term in their lease, that specific item in their lease is having an impact on the value.
Very interesting.
Yeah. So they're actually kind of working through that right now.
Oh, that's really
so that
interesting.
was really serious. So it doesn't happen very often when we see it like that, but that's just an example. And sometimes we'll just say, the most common ones we find are usually like it's a flat rent rate, a flat lease rate. That has especially in an inflationary environment, You know, uh, good annual escalations are something that it's more of a business term, but man, it really helps your value and helps compress cap rates.
Are there issues with badly drafted leases, like leases are come to you and they're just a mess? You know, the landlord has been using some form that he's had kicking around his office for the
Yes.
past 20 years, where his assistant inadvertently deleted, you know,
Yeah,
the,
so we run
whatever,
it.
yeah.
I've seen it all. I
Yeah.
mean, we certainly have. The buildings, like that's where I kind of go back into a situation where you have everybody on very similar leases, the same type of. I'm not going to say form, but the
Right.
ownership has the same lease for all the tenants.
Right.
The same customized drafted lease.
Yep. It's uniformity.
It's uniformity
yeah.
of the lease. It's as well as the provisions are going to be the same or the same type of it's going to be
Right.
structured the same on the legal side. That certainly helps with feasibility, and it helps. We have walked into situations where everybody's on a different type of lease.
Yeah.
And that's a lot of work for the brokers. But at the same time, does it have a large impact on value? As long as the meat and structure and and it's structured correctly, it's the buyer can clean it up after the fact.
It might be annoying for the buyer to clean it
yes.
up, but the buyer still can do it.
But it also can have the perception. It depends on it's a case by case deal.
Sure.
Like if you're in a soft market, people are going to try to use certain things against you
Right.
versus if you have a market that's going up in momentum. But usually in situations where we have tenants on different types of leases, I would say 9 times out of like a bunch of different types, it's pretty unorganized and it's kind of pieced together. We usually find provisions in those leases that have items in there that need to be cleaned up a little bit.
Yeah. And I certainly know that being on the buyer side, when I've done due diligence and I see a mountain of documents and they're all over the place, I bet this entire building is being operated this way, right?
Yes,
it's almost
that's
like
exactly
you sort of
right.
think, okay, well, they're not keeping good records. They don't have any, they probably let their insurance.
Well,
lapse,
it's like
whatever it is,
anything
yeah.
else. It'll make them try to look under the hood a little harder.
That's what it is, yeah.
Yeah, and
completely.
so it really that when I go in, it has an impact on due diligence, the perception of the buyer. So like anything else, it's astute buyers are going to they're going to do their thorough due diligence,
Right.
and if something looks uniform and clean and they see consistency, they're gonna know that the seller has their ducks in a row, and they're gonna be, I'm not gonna say less likely to do thorough due diligence. It's more that they're gonna trust what the seller's putting in front of them more, which psychologically, that's what we've seen psychologically as they feel like they're buying something that has been the seller has been a good steward of.
And exactly, and I know that I've had clients that have stepped into buildings where everything was beautifully organized in the war room, and it turns out that when their files are turned over, everything was beautifully organized
Yeah.
in the office, And so we
Yes.
just kind of like started, we hit the ground running. But when it's been the opposite, it's been a little, it's been rough for a couple of months trying to get it
Yes.
stabilized and understanding. And
It's like when you walk into a building and you just see like little things. I mean,
Yep.
you're like, is this being things that whether it's windows are like don't look like they've been cleaned, or
Right.
they're just not the lobby doesn't look like it's been. I mean, it doesn't look like it's been well maintained. I mean,
Right.
those types of things. It goes into you start thinking, okay, what else am I going to find?
Right.
And so when everything's buttoned up and in uniform, it assists with the probability of closing, I would say.
How often do you find discrepancies between like rent rolls and leases?
It happens.
Yeah, it must happen. Yeah.
Yeah, so especially on the private side.
Yeah.
I mean, we've dealt with one specifically,
Mm-hmm.
and that one goes into with we had a tenant once that on the rent roll they were paying 24 net, and reimbursing based on I think their grossed up rate was 35. But when we actually went to underwrite the property for sale, we figured out that the tenant had been paying this for 4 or 5 years. and we figured out that the rate was actually 24 plus E.
Oh, wow. And so it was 4 years of OpEx they hadn't been paying.
No, 4 years of OpEx they've been overpaying.
Oh,
Yeah,
right.
yeah.
Oh, my God.
So then that was an interesting situation, and the tenant didn't know that. That's the first time I've ever seen anything like that. So that's an extreme example.
Yeah.
I mean, to the tune of, it was over, I can't remember the exact amount, but that had to be dealt with.
It wasn't a 1,500 square foot tenant. It
No, it wasn't. Yeah, but it had to be be with.
Yeah,
and
of course.
but this was a smaller office asset, and it was a tenant that does very, on the plus side, the tenant obviously does very well.
Right.
But it could have been construed, because it
Right.
was the way that the rate was written in the lease was conflicting with each other.
See, that's
so-
a very important point, right?
Yeah. So what are they going to err on the side? So that's a major issue.
It is.
Any buyer that's going to buy that is going to see that, and
Yes.
so that has to be cleaned up. So it could have been construed either way,
Right.
but based on, after speaking with an attorney, and it was like it did seem like, even though it was conflicting within the lease, the rate,
Right.
the way that they were supposed to reimburse it. The tenant could have had a good case, and luckily we found that, and so the ownership approached the tenant, and we were able to kind of exchange a few, like some months free or stuff like that, to clean it up and get them to extend their lease.
Great. Great.
But yes, we see a lot of times it's not necessarily the rate; it could be square footage.
Yeah.
It could be little things like that, or the expirations.
Right.
Because a lot of times tenants, in the lease, it'll, their lease commences after tenant improvements are completed, or within, upon substantial completion. So there's not, we don't always have, it's not in the lease that it says, hey, this lease will commence on January 1st always, or, it's upon substantial completion. So sometimes we'll have the expirations conflicting with
because there's not necessarily like a clear commencement letter, because that's something that, again, the property manager has to remember to do, right? Another step in the process. Just as I find overly complicated reimbursement language is like setting up a landmine for the poor person who's working for the property manager that needs to calculate the reimbursement.
That's the other issue. Like, that's the one thing that I would say, that's where, like, when you're on the modified gross leases and or base year expense stops, especially on the base year leases. I mean, expense stops are a little bit easier just because of the fact that it's a hard number. But if somebody has, let's just say, a 2018 base year, well, the ownership or management in this case would have to keep good records of what those expenses were running those years, to calculate the pass-throughs. So, when you're going to sell something, it just creates an extra layer of work and even an extra layer of due diligence for the buyer. And so in those circumstances, you just want to make sure you have a good management company that's keeping good records and keeping track of all of that stuff. You don't necessarily you don't have to worry about that if they're converted over to triple net.
Right. When you work with attorneys, what are your least favorite qualities in an attorney? Like, if you could, for example, make your own attorney.
Yeah.
Like a choose your own adventure, what would that attorney be like?
Man, there's some attorneys out there that I really like. I mean, that have done some really good. I think in our business, the qualities that I don't like is ego.
Interesting.
And mainly, I always kind of joke. I've really only gotten into disagreements with attorneys that were representing my clients. Isn't that funny? It's funny. I mean, and that's only happened maybe less than one or two times, but
which
it's really
is the opposite of how it should be.
Yeah.
Like,
I mean, we had an attorney on the other side that was had inserted himself. We did, have he had an ego, and client was leaning on him quite a bit and trusting this attorney quite a bit, and the attorney inserted themselves into like business terms
I
and
see.
comments.
Right.
Attorneys that are deal people are
Yeah.
very good. I mean, it's when I say ego, and what I mean by that is you have attorneys that sometimes get caught up in, being right and trying to prove that they are. I'm not going to say smarter. I mean, for lack of a better word, smarter, trying to prove themselves
Yeah.
and kind of looking. At the other side and over legalize that overkill the lease and versus who's going to care about a certain provision and get
Right.
caught up in some of these eminent domain or anything.
And that's exactly what it is. It's so funny you say that, Wilson, because and you haven't seen any of the other interviews that people have spoken to, but that need to be right on behalf of lawyers has come up on 3 separate occasions with 3 separate people, and it's absolutely, I can't agree more. It doesn't, do you want to be right or do you want to just get your way? You want to get the deal closed? Do you want to have
there's certain, nothing is going to be 100%
right
in this business.
Absolutely.
Nothing is guaranteed. It's about picking and choosing the right provisions focusing on the provisions to mitigate risk.
Right.
And when I see people that are focusing on legal language, on provisions that have a very, very low probability of, even if something were to go awry within that provision, it's not going to have a detrimental impact to the asset itself. Those are, sometimes we see those things.
I can't agree more about that. And it's the problem with, I think, a lot of lawyers is that they've never owned a commercial building. So, and I talk about this a lot, when I meet with clients. So they don't understand what's real risk and what's phantom risk. And of course you want to protect your client to the best of your ability, but that does not mean arguing over irrelevant language that is, it's racking up their legal bill, it's slowing the transaction down,
right.
And it's just creating acrimony. And it always seems to happen when the deal fatigue sets in closer to the close. You find that we're arguing over something completely stupid. And that's usually the time when you just want to put up the white flag and say, listen, let's just get this thing to the finish line.
So there's we call them, there's deal attorneys, and then there's attorneys that what we say in our business, we're contingency based. So we don't get paid unless we close escrow. Attorneys always get paid.
It's interesting because that's one of the reasons I moved to a flat fee model was that I am then incentivized to do this as rapidly and as efficiently as possible for my client, because if I take 15 hours to do something that really could take 2 hours, I get paid the same amount of money, right? You get paid faster with the flat fee as the broker. I get paid faster. The landlord gets the place leased up faster or gets to the closing faster. That's always, I feel, the best way to do it.
Yeah, and I think so. I mean, I'll tell you this, especially on a lease-up standpoint. I mean, it is because we have exposure to quite, we see that side of it. Buildings that have good response times.
Yes.
That's very key. I mean, so we sell a lot of distressed assets. So, and when a property's in special servicing, I can't tell you, we were talking about this internally. We've talked about it a couple times over the past year. There's been a number of times, probably a dozen times in the past, 10 years that we've underwritten an asset that was distressed. I'll say, let me preface this, in a time right now when there's more distressed assets, we're probably, I would say 50% of the assets that we're selling are distressed.
Interesting. Okay.
So, but over the, probably maybe 10 or 12 assets that we valued, and typically servicers will, it takes, when a property gets distressed, they'll get a broker price opinion or a broker opinion of value, but they'll also get an appraisal. Those are different because ours is actually real time with the market value is what it's worth real time, and the appraisal actually has to look at historicals. So in a shifting market, up or down, the appraisal lags what are so. But long story short is we've either put a property on the market or they didn't market it. And every time and they didn't. Maybe they held on to it for another year or two.
Right.
Only to come and every time they didn't either transact or did not put it on the market to sell, we still to this date have not sold an asset that was worth more than what our original value was. It
Okay.
was meaning the asset values usually drop about 30 to 35, 40%.
Okay.
The reason for this is the servicers have a tremendous amount of committees that they have to get approvals for.
Right.
So the response times that the tenants are getting, the leasing agents, they can't get in this case, the servicer or the lender to respond in a period of time. So if you have tenants that are, they need to find space and they want to lease in the building, they may want to be in that building, but they can't get the types of response. They may be waiting for, a response for the proposal for a month.
Right.
I mean, so anything that can speed up the process on
That's fascinating.
and make it more streamlined,
Yeah.
I think that would certainly help on the lease up side.
That's
Especially
so interesting you mentioned that, and I at least have experienced that from the perspective of doing leasing for a CMBS property, right? Where every lease has to be blessed by 900 different
Yes,
committees.
that's exactly the same thing because the servicers are servicing
servicers, right?
distressed CMBS loans.
And it's just aggravating because the tenant wants to leave. They're like, this is so stupid. Why can't I get?
I was
lease?
touring a building for a servicer a few weeks back, and the servicer it's an REO, and the servicers had it. They've maintained it well, but like when I was touring with the property manager, I'm not kidding. With 3 or 4 of the tenants were like, when am I going to get that lease renewal amendment? It's been like 3 months. That's on a renewal.
That's amazing.
So it takes them that long. So that just shows you. I mean, that's more on the bureaucracy within that, but I think it's really important to, obviously you want to have the lease be as airtight as you can.
Right.
But focus on attorneys that focus on the right things and focus on solutions rather than, I like attorneys that focus on solving a problem and looking to get, coming up with a way to, if you're at an impasse on if it's an important provision to both sides and there's an impasse, attorneys that will get on the phone with each other and work it out versus pushing red lines back and forth, and it becomes about ego.
That's very interesting to me. So like sometimes when I get on the phone with opposing counsel, they want to get on the phone to tell me why they're right. Like that's what they want to do is just hammer in the right.
Those are the types of attorneys I don't like.
And I can't.
And that can be.
it.
I can be. Those types of attorneys can be on. They can be the attorney for my client.
Sure.
And I would say that I was exposed to on the tenant rep side, the leasing side, actual lease side of it, very early on, because my first boss, she did all the corporate work for like Morgan Stanley and Smith Barney, and so she was very involved when the LOI got to leases and assisting. So I got to learn all the nuances and ins and outs, and it was in some cases she knew more than the attorneys because she'd been doing it for so long. So, it's something that I think. I'm not saying it's not rocket science, but it's very important, and there can be some complicated things within these sale contracts or leases. But it's really somebody that's there to deal making attorneys are focused on trying to, work on a solution to get past something that isn't, both sides have an issue.
There's always a solution. There's always a middle ground.
Oh, there is. Yeah. There is. And honestly, we're very involved on if a property goes to contract, we are involved more than a lot of firms, just because where we found a deal when we found issues. When we run into issues, if the property goes to contract negotiations, it's not under contract, and we're still really involved in due diligence. And if you just, I would say over 50% of the time, if we leave the attorneys alone, sometimes it becomes a problem.
Of course it does.
And it's and
Isn't
I
that
can
interesting?
Yeah.
And
So
sometimes I wondered, why are there brokers involved in this? And it's to keep us, or
Yeah,
keep,
yeah.
at least not me necessarily,
There's
to keep
some
the
attorneys
lawyers.
I've worked with in the past that I know that are good. That are
Right, right.
that are, when I say good, I know that they are there to try to facilitate.
I can always tell when I get the first red line back, and it's got
Yeah.
a bunch of sensible comments in there, and maybe I didn't consider something that I should have, and so it's like a 2 red line thing, and we're all done,
Yeah,
right?
yeah.
But then I know then when I get back the bloodbath from a form that nobody else has objected to.
That's a good sign
You know,
that you're
yeah.
dealing with somebody that wants to flex. Where we run into issues with attorneys on the opposing side is a lot of times if and this happens on the private client side, and more so on when it's an individual buying a property.
Okay.
And maybe they don't have a relationship with the real estate attorney, and they got
interesting,
referred
yeah.
into one. So this is this attorney's first time working with this
Right.
with this buyer.
Yep.
They want to
Prove themselves.
prove themselves,
Right.
flex muscles,
I'm
to show.
tough.
Yeah,
Right.
yeah. Let me show you how I'm going to protect you. So a lot of times, in situations like that, we will. And that was the property that I was talking about where we had an attorney on the opposing side. That was this exact situation. This was a owner operator of a dermatology business that had a few locations. She did very well, but she had never owned any real estate. She was buying this piece and really relied on her attorney that was referred to her.
Right.
And so this attorney, came in and was asking for things and started making comments to unnecessary items, and
Right.
it's somebody that's coming in, and so we have to work through that. We ended up getting it closed, but it was
unpleasant,
yeah,
wasn't it? Yeah.
But it's okay. You learn something on every deal.
And in a situation like that, the way to manage your client's expectations as a lawyer is to explain, I'm not going to come back with a mountain of red lines here. That's not the way. That's not what's going to serve you the best to get what you want, the result that you want. We want to get this closed, and I want to protect you. But it doesn't matter if we argue over this dumb stuff.
Yeah,
right?
I mean, most of the tenants, if you're talking about leases, most of the tenants don't even know what the provisions they have in their leases.
Right.
I mean,
Sure,
it's
no,
like-
no,
it's
exactly.
amazing.
It's really true. And when they do have an attorney,
yeah,
like the one
it's
thing
funny.
that I try and do is every couple of months, look at my lease form again and make sure it's market. Make sure I'm not overly like landlord centric if it's really a tenant's market, because if I, for example, have a paragraph that consistently gets changed and redlined by a tenant's attorney, I know that there must be something wrong with this paragraph that I'm drafting.
Or it's too onerous,
Right.
or whatever.
It's too onerous, and then I change it because it's like, I always concede on this point because it obviously is too onerous. So therefore, why don't I just start in the middle?
Yeah.
So we don't have to have this kind of a discussion.
Yeah,
It's pointless.
I think most, especially depending on what asset. I mean, an office. I mean, in a listen, I mean, the office market is it's going through a significant shift. I mean, I would say that we're probably, there's still uncertainty. I mean, I think the next uncertainty is how is AI going to impact the office market as far as, we had
That is
COVID.
an interesting topic, isn't it? Yeah.
Nobody's really saying anything about it yet, but that's just kind of, I'm starting to think about that. But like,
What are your thoughts? I'm really curious because I've thought about this a lot, like kind of a lot.
I think AI is, it's very overwhelming from the
Yes.
standpoint of there's so much being thrown out. I think there's a lot of marketing out there right now. And, there's not, I don't think we're to a place, and based on what I've read, to a place where it's like everybody's going to lose their job in the next 24 months. The technology will continue to increase in pace, but there's challenges on that side from the actual. Do we have the bandwidth from the data center perspective?
Right.
Number one, but as far as I think, we will have to be involved with the way that I see it being used today is it's a support tool
Completely.
and it still we look at it. I've had it look at numbers and look at things. It's not correct a lot of the
You
times.
have to watch it, especially with numbers.
Yeah.
I use it judiciously in my
But
practice.
it's great.
It is
It's
amazing.
yeah.
It has been able to make my lease turnaround times now 24 hours.
Mhm.
You know, it's enabled my staff and I to compete with big firms, but not charge big firm prices. But at the same time, it's not doing everything.
Yeah.
I am supervising this. You know, it's almost like having a first-year associate out of law school.
Yeah.
But that you don't need to bill out to make your
Yeah.
overhead. You know?
And there's things I mean, I can certainly see, it can replace, you can see where, it could reduce some of the workforce on certain aspects, but some of that stuff is customer service based. We've already seen kind of a
Absolutely.
reduction in that. I mean, I would say, as far as, I think it's still too early to tell, but as we see right now, it's humans are still going to have to interact with it, and so there's still going to be people in office space. I think it's more along the lines of that could be 20, 30, 10,
Right.
15 years down the road. I will have to see where this all goes.
I mean, the only thing I see it replacing are maybe books, like just almost like the internet.
Well, you can
know what I
see
mean?
it
Like,
replacing like analysts and stuff like
Sure,
that.
yeah.
And my analysts would probably or some marketing people.
Right.
But even then, so let's just put that into perspective. Like for what I do, when we market a property, we put together an offering memorandum, right? Let's say I try to automate all that.
Okay.
That still takes some time.
Right.
And out of what my best use of time is to get out and sell property. Right. So
And so much of your job, at least, and my job, is based on judgment and experience, right? And really knowing who you're dealing with, audience. And I mean, I don't think maybe AI can be taught that eventually, but certainly
it's
not
there.
now.
Not
Not
there.
now.
And it's my understanding, to get to that point, the amount of computing power, amount of processing power is substantial, and we're far away from that kind of capacity.
Right. So the robots aren't coming to get us, Wilson.
They will eventually. They will
But
eventually.
not
Don't
yet.
worry. I think about that a lot. It's not as
Yeah.
far as I think more about humanity as a whole. That's a little bit more morbid.
Yeah.
But
and ethics and
and
morality and
well,
all
for
of it.
my children, really.
Yeah.
Yes. But it's coming, and
Yeah.
it's an interesting time. I mean,
Yeah.
it really is. But there's always been shifts in the world and the economy and the way people use things. I mean, I always kind of go back to with office, there's a shift from the post pandemic. But
Right.
one thing that's becoming clear is, all these companies bought into this remote work, and now they're saying
Right.
they're the productivity within their companies not what it used to be. So they've demanded people get back to the office. Now companies are shifting how they utilize space, and they've
Sure.
reduced their space footprints. But that's where we come with repositioning of obsolete assets. I think I think office will be around. I kind of go back to the Amazon effect. Now back in EDGE, the brokerage side is primarily focuses on retail, leasing and tenant rep, and back in 2010, 11, 12. Or 12 through 14, it was like Amazon's going to destroy retail. Big box
Interesting.
retail is dead.
Right. Right.
you
I remember
and,
that. Yeah.
And so you had all these institutional groups get out of it.
Yeah.
And now retail is the hottest asset class. People still like to go out and look and touch and feel things. I mean,
Completely.
but Amazon, don't get me wrong, I have Amazon packages on my porch every day.
Right, me too.
Because
Yep.
I know this because I have to break the boxes down.
Yep.
But retailers adapted. They got a lot more savvy about where they're located.
Yep.
If you went around DFW right now, you could not find it'd be a very large challenge to find a large box that's vacant.
Right.
And everybody said, I would never want to own those types of assets, and now you can't find one.
Absolutely.
So and I would say the vast majority of where we see the investor interest right now is on the retail side.
That's very interesting and completely not what you would have predicted.
Just think about it. If you owned it, I always say think about things very simply. If you own a company, where would you want to be? Where do you think you can attract employees to come to the office?
Absolutely.
It's if you want an attorney, don't hire an attorney that's going to stand in the way of your deal.
It's exactly.
There you go. There's a plug.
Yep, good, excellent.
That's especially if you're trying to lease up. I mean, you want to be responsive.
Yes.
You want to have things to be able to turn it, to be as nimble as you can when you're trying to make when you're trying to make a lease. The brokers certainly appreciate that, and furthermore, the brokers on the other side appreciate that.
Yeah.
Because those guys are trying to get their tenants to make a decision, or their clients to make a decision, because the easier and more uniform and the more the less barrier as far as like response times and those types of and I'm not going to say you don't want to have the right protections in your
Right,
lease
of
and all
course.
that stuff, but somebody, those things certainly help your building get leased faster than others.
Because they know that the lease form isn't obnoxious, and the lawyer who's negotiating the lease form is not obnoxious, and the leasing broker wants to get the place leased.
Yeah.
It's
and you're going to make it easy not make it easy. That's the wrong term to use. But, on the tenants broker, it's more, those things are, you're open for business. We're not going to, we want a fair deal.
Yes.
And we're not going to overreach.
Yes. Because honestly, I have never been successful with a lease that was overreaching. When I started out, that's the way that I approached things when I was like 30, and I'm 30 now.
Or a sale contract that overreaches. But
Right,
yeah,
sure.
it's
Or
the
a
same
contract
thing.
that exactly
It's
the same thing. Sure.
Yeah.
And then you realize this is just not sensible.
Yeah, I will say, the last thing I'll say about this is, we have seen attorneys get in the way of a deal transacting.
Yeah.
And so that can happen on a lease. That can happen on, other than finding out something material and due diligence.
Right.
We've
worked on those deals together, I think.
Yeah. So, well, exactly. I mean, as far as we have, and there's been, it's interesting. I mean, like I said, there's deal attorneys and there's attorneys that just want to,
be right.
Be right, or not even. It's not even about that, or just, show you that they are smart.
It's
or
like
try
a
to
flex.
be smart. Yeah, it's a flex. Yeah, it's exactly what it is. And it's unnecessary.
Yeah.
And it actually is not necessary for either side, even their own client. It's doing their client a disservice, in my opinion. Because I mean, at the end of the day, the goal, what I think some attorneys miss is, the client wants to either lease up their building,
right,
or they're wanting to sell it, and when they have the attorney involved, and so if we see attorneys that don't always remember this and get caught up in unnecessary items, or they get crossways with unnecessary things, trying to, and so that's not, in my opinion, not doing the best service for their client.
I agree. That's not, you're not thinking.
And even on the
client.
other side, I mean, like I see it, and it's just like, you're not, if somebody's trying to buy something and the attorney's doing it, or if the tenant's broker is trying to, tenant's attorney, and then they kind of lead their client down a path that is not productive.
That's exactly right, because the client isn't getting what they really want, which is
it's the ultimate goal. Is they bought an office building to lease it up,
right, and be protected. That's why they hired the lawyer.
Yeah, exactly.
And
you don't want to do bad deals, but it's about finding that right balance, I guess.
Exactly. I totally agree, Wilson. Thank you so much for coming by.
Hopefully it helped at all.
It did. We'll talk about AI next time.
Yeah, I know. I'll study up a little bit.
Cool.
All right.